Hi guys, welcome back to the Liberty Bunker. The coronavirus-induced recession. This is something a lot of people are talking about, and it's for good reason. We have nation after nation going into lockdown. If you lock down your country, you can only expect there to be a severe impact on GDP. Fewer people going to work, factories closing, people not buying things in the shops, export industry impacted. It only makes sense you should look for a severe knock on GDP. How big that knock is, we don't know yet. It could be somewhere 5, 10, 15, maybe 20% or more. It depends on the country and each unique situation they're in. And that's something we'll probably start finding the data out on as the weeks and months progress. However, that's not the biggest problem in the system. Now, yes, 15, 20% drop on GDP, that is big. That is a big problem. And that's a recession like which we haven't seen for a very, very long time, certainly in most people's living memory. However, the bigger problem is the size of the debts and the malinvestment that's happened up till now. So we have a fiat monetary system. Pretty much every country in the world follows this fiat monetary system. Central banks just decide how much extra money there'll be in the system. In theory, central banks can reduce the money supply, but that doesn't really happen. Central banks are highly politicized. Politicians will put a lot of pressure on them to keep interest rates low, keep the money supply going, because at least temporarily you can increase unemployment levels. You can make GDP higher than it otherwise would by continually injecting this money. However, central banks are a form of central planning. Most people will agree that central planning isn't as good as the market. It tends to be less efficient than the market, and central planning tends to make mistakes. That's one of the reasons why we have this continual boom-bust cycle, because we have central banks setting the interest rate, setting the extra money that's going to be in the economy each year. But central planning just doesn't really work. So we have interest rates often too low for too long, too much money gone into the system. Then we have maybe a small crisis, but it turns into a much bigger crisis because of the central planning and the errors they maybe have made in interest rates, etc. So this is the system we got, but it's certainly not the best system. One of the reasons we have this system is good for banks. If you have a continual growth in money supply, it increases inflation. Inflation is good for people that are heavily indebted. There's no institution that has more debts than governments. Governments are the biggest debtors out there. UK government, trillions of pounds in debt. So if you have continual growth in the money supply, you have continual inflation. That means it's actually chipping away at your debts. It's one of the reasons why governments like it. And of course, they can buy votes by having extra money supply and maybe creating jobs that shouldn't really be there. It basically creates bigger problems from when the recession hits. Now, up until 1973, we were on a gold standard, at least a quasi-gold standard. At least the Fed followed this, but the Federal Reserve, the US dollar, is the world's reserve currency. By the Fed being on a gold standard up till 1973, by de facto, most other countries were at least loosely linked to what the Fed was doing. That ended in 1973, and since then everything's got much, much worse. The 1973 gold standard wasn't perfect, but it did keep some check on central banks' abilities just to increase money at a never-ending rate. So in the 90s, we had a period of lower interest rates. Essentially, the Federal Reserve, Bank of England, central banks around the world wanted to avoid a recession. The late 80s were quite bad for stock market crashes. There's something that they wanted to avoid going into the 90s, so they lowered interest rates. This had a bit of a bull run. We saw the dot-com bubble really gather pace over the late 90s. Now the dot-com bubble popped in late 2001. That bubble really started to pop. Obviously, there was September 11th terrorist attacks in America. So in the early 2000s, the Fed really increased money going into the economy, slashed interest rates because they didn't want the recession off the back of the dot-com bubble. They certainly didn't want the recession following September the 11th for political reasons. So Fed dumping more liquidity into the system. We had then a big bull run in house prices. So we had the housing bubble. This happened in America. This happened in the UK. You pretty much only had to turn on a TV show in America, in the UK, and people will be telling you about this new amazing house flipping paradigm where you could buy a house, paint the walls, and you'd make £30,000 profit overnight, $50,000, whatever it is. It really was a bubble, and looking back now, I think most people can see the housing bubble for what it was. Now, house bubble collapsed, popped, 2007, 2008, and then not wanting to face a recession again. As you can see, each time these bubbles are getting bigger and bigger and bigger. We had a dot-com bubble, which was big. Then we had housing bubble, which is even bigger. Now the bubble we're at now is essentially the everything bubble, because the central banks, the politicians, have refused to do the right thing and unwind the malinvestment. So each time it gets bigger. Essentially now we're in the everything bubble. We've reinflated the stock market bubble. We've reinflated the housing bubble. Government debts are bigger than ever. Corporate debts are bigger than ever. Household debts bigger than ever. Stock markets are flying again. Wine, cars, art, supercars, classic cars. There's just a bubble everywhere. Now, this needs to be unwound, but who's really going to take the pill? Who really wants to do that when you've compounded it with this super black swan event, once in a generational event, maybe more than that, maybe a once in 100-year event. So the bigger the debts, the more you have to unwind. Now, there is really no easy way out of that. Obviously, with hindsight, you could say that we should have never got in this position in the first place. However, we are in this position. The politicians, the central bankers have dragged us into the position. They have no real ideas left to fight it. The tools they're using to fight this recession are exactly the same tools they've used previously. However, they're becoming increasingly weak. We're already going into this recession with 0% interest rates. So, the Bank of England have dropped interest rates now to 0.1%, but we were near zero going into it. We've had huge amounts of QE over the last 10 years off the back of the housing bubble that didn't really do that much. So there's nothing they can do with interest rates. They're going to continue printing money. That's just a given. That's basically the only tool they have left. But ultimately, it's going to make the crisis deeper and deeper and deeper. A lot of people will argue, well, we just need to do it for the next 12 months. I'm not necessarily saying that's the wrong thing. I'm also not saying it's the right thing. However, the central banks are the people that led us into the problem, and it's also the people we're looking to lead us out of the problem. Ultimately, there are billions, if not trillions, of assets, of investments that were made in error. It was just cheap money. It was 0% interest rates. It was free money given by the central banks to investment banks, retail banks, loans that never should have been made. This is a huge, huge problem. There's no way of unwinding this painlessly. My biggest fear is the central banks are just going to do the same old tricks they've always done. They're going to try and reinflate these bubbles. That's probably the most dangerous thing to happen. If they do try and reinflate these bubbles, the worst thing that could probably actually happen is they reinflate the bubble and they are successful doing that, because it means the next recession basically is the end of everything. Even this recession could be the end of everything. I don't really see a painless way out of this problem at the moment. So let me know your thoughts and opinions on this one. Do you think this is all caused by central banks, or is this something that central banks can fight just by 0% interest rates, maybe negative interest rates, and just keep pumping money into the system? Because I don't think it's going to be an easy one. Thanks for watching this video. Jason from Liberty Bunkers sign off, and I'll see you in the next one.